Hey guys, what's up? Hitori here. Welcome to episode 35 of the weekly market outlook with TradeXProp. Now, in this episode, I'll be covering the DXY, GBPUSD, S&P 500, NASDAQ, Dow Jones, gold, and also Bitcoin. So, if you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord where you can ping me as well as the other TradeXProp team to answer any of your inquiries or questions. Alright, so wild week, right? Let's just kind of do like a recap of what we saw transpire in the previous week before I get into the nitty-gritties of the technicals. So first off, I do want to cover the CPI reports that came out last week. It all began with pretty much the UK and the US. They both kind of signaled a drop in inflation. If we look at the UK, a drop in inflation essentially sparked optimisms that an interest rate cut might be on the horizon, maybe even as early as February of this year. So like less than a few weeks now. We might see an interest rate cut in mid-February. The UK GDP figures and retail sales data actually came in weaker than expected, which reinforces the case for a February 6th rate cut by the BOE. So with this in mind though, if you look at just the chart of pound dollar, it has been, if it loads, oh here we go, it has been in a big downtrend for quite some time and has been struggling. It's been dropping all the way from 1.34. Now we are at around 1.21 against the dollar. This is a pretty large shift which took around 100 plus days. So keen to see what we're gonna expect with this rate cut. We might just see lower prices from here, but I'll get into more specifics later on. But for now, let's just wait for that rate cut before we make a decision, right? So looking at the technicals here, we can't really say that we won't be expecting lower prices per se, because we have just been dumping for an extremely long time, right? So for us to say that we are going to be seeing higher prices, it is probably just in form of a bullish pullback to correct some pricing inefficiencies before continuing lower, right? But for that, we have to look at any key news releases, or at least have we even tapped a key level to signify that we might be going higher, right? To at least give us that rationale. And if we scroll left, we have reached a pricing back in the inflation scares back in 2023 in October, right around this level of price action right here. And we have actually tapped into the lows of that range of accumulation at around 772 and 115, right? So coming back to the left, we have tapped that, and we have seen a few bullish days, right? Just two really. You could count this day since it's pretty much this indecision, but we have seen some rejection higher. But if you look at closely how the reaction was, it's really weak bullish candles, right? You could even say that these are also candles that showcase indecision because of just how weak their body to wick ratio is. So this isn't exactly a good move you'd like to see coming out of a level that you expect market to give strong support. But regardless, what we saw after that is we saw strong bearish closes and a swing high being formed. Alright, so with this in mind, we could be continuing lower next week down into this area, taking out this previous week's low, deeper into this area, and we can then decide to see if we could potentially expect some continued bullish movement higher to signal us that pullback. But as of now, with that rate cut expectations, we might not see any bullish pressure at all. We could just see the market continuously dump lower. But on the off chance we do respect this level, break this newly formed area of resistance, we could be coming up to retest the high at around 1.23, and even coming higher than that, we could see price continuing higher to retest this area of price action at around 1.23742. You know, if we do break it close above that, we could even reach all the way up to 1.252, right? So it all depends if we see respects of this area. This is what's I expect to see. I don't expect price to break this area, of course, since I'm just expecting a bullish pullback, not a bullish trend to start. But if we see the expected scenario, which is breaking below these lows, right? Looking into the left, we do have clean traffic to support the move going lower, right? So a break of retest of 1.2077 is ideal for us to take price lower, since we are also bearish on the fundamentals as well, not just the technicals. Okay, so that's pretty much it for pound. Let's go back to the DXY right here. So we went through the CPI reports of the UK. What about the dollar? Well, the dollar, before we get into CPI, we will kind of cover the retail sales data. It did kind of signal cooling, right? Which kind of aligns with the global trend of just overall economic easing. But while US economic data has been strong overall, there are emerging signs of softening that may also prompt the Fed to consider rate cuts a bit sooner than previously expected. And that's because central banks often move in tandem. So if the Fed reduces rates, it could set the stage for other global G7 nations like the UK to of course follow suit without the pressure of maintaining higher rates, which is why we saw a potential rate cut from the UK. Markets, however, of course, they remain unpredictable. I mean, just a few weeks ago, if you remember, in my previous forecast, we didn't really had any ideas of any rate cuts this year, maybe one or two. But now analysts are even predicting, up to 3 or 4 rate cuts in the UK by the year end, which underscores just how uncertain the financial markets are, right? And just how the brightest minds in the economy is really, they're really just making educated guesses. Nobody knows for sure what's going to happen, right? But on the US dollar front, since we're here on the DXY, the Fed's recent hawkish press conference provided a boost to the currency in itself. I mean, we've seen a boost for a pretty long time now, but the recent one gave a boost to just the currency as well from this strong closure, which was supported by the dot plot's projection of just higher interest rates for longer, which has actually just continued to keep the DXY being as bullish as it is, right? And Trump is also going to be sworn into office really soon. Looking at history, right, during Trump's presidency, pressure on the Fed to lower rates has actually weakened the dollar. And a scenario like this could repeat itself if the similar dynamics that we saw back in his previous period of presidency return, right? While everyone loves a strong dollar, and the strong dollar gives a clear trend for people in the US, a strong dollar also makes US exports less competitively. If you look at it from a global standpoint, this is something that policymakers, including Trump himself, have shown concern over. All right, so here we have the DXY. Still, from that reading of just how strong we are based on not just sentiment but also fundamentals, I don't think you should be expecting any prolonged dips, right? I think you should look for price action to come into an area of strong support and then push higher, and then you can go long in there, expecting price to kind of just break any previous areas of resistance, seeing how we probably don't have anything that's going to be pushing us, lower. So right here, we closed really bullish last Friday, and I expected price last week to actually kind of come down lower into here. This would be my ideal place to look for longs, if you recall in the previous outlook. But of course, sometimes the market just does what it wants. And here we have a strong bullish candle support form. In the last outlook, I also outlined that we could see price not reach here, but instead pull back, form a new support, and continue higher. And this is quite a strong bullish candle close. It's quite convincing. So with that in mind, there isn't really much space left for this run higher to this next area of resistance. You could technically take a long here, starts beneath this previous low, targeting maybe this next area of resistance, even higher, right? But if you want to be a bit more cautious, what you could also do is you could just wait for price to break this resistance, do a low time frame retest, and then as long as you hold above that price level of 109.64, we should in theory be looking for price to continue higher into 110, right? If we do reach 110, I'll see where we get from there. But if we do break higher with a retest, once again following just the trend, we should see price come up higher into this next area of 112, cleaning off this clean traffic right here, just like what we did in this area. Okay, so of course, if it dips below this support, holds beneath it, then I think it's a clear sign that we're going to come back down into this area of accumulation right here to continue the move higher. I look for some price action within here to confirm that, but breaking down beneath 107, it does kind of signal some worries that we might be seeing a prolonged pullback after making huge bullish runs like these, right? So if we do break beneath 107.798, we could see price retrace down to cover this clean traffic right here. This is not exactly a strong area of support, but it is still a support nonetheless. Breaking beneath that, we've already covered quite a lot of range right here, actually taking out the previous bullish leg entirely if we do come down all the way to 105. But that's besides the point. Still bullish until the bearish move happens. I won't say anything much. Okay, so that's the DXY. Let's take a look at equities. All right, so let's look at the S&P 500. So right here, last week I noted that if we broke beneath this level of support, we should be continuing to see a break and retest right here. But I needed price to hold beneath this level, turn bearish, break that low, continuing lower, right? And we didn't see that, hence there wasn't a confirmation. We came up and then we just blew past this level on Wednesday. This entire move higher is technically driven by strong earnings and also anticipation around Trump's indices bullish policies, right? So when Trump's in office, normally the economy would be performing quite well, and you could see more people being risk on, which kind of pushes cash into more risky assets like S&P 500 and other indices. So with that in mind, we have actually reached I don't trade trend lines, right? But we have reached a trend line area of resistance. So I like to see price break above that and then come back to retest some of these areas of horizontal supports to see if we could continue to trade price higher into the next area of resistance. But really, if we do break this trend line, I want price to reach all the way up into the all-time highs right here, and then we'll see what happens here. Right, potentially we could be seeing a new bullish run. Right, on the off chance that next week we actually do a fake out, right, if we break beneath this level 5938, we could see price continuing lower down into potentially to retest the newly formed support at 5826. Okay, but looking at the Dow Jones right here, this is cleaner price action. I mean, it's not as clean as it could be, but it's still cleaner compared to the S&P for a potential break and retest. Right, same idea. If it breaks this level, we could see a retest down to fill this range, retesting the newly formed support, or at least coming down halfway into that range through retested area, which is still around a almost 7,000 tick range for that retest. Always show your stops once it gets into profits. That's the Dow Jones. What about the NASDAQ? Taking a look here at the NASDAQ, similar to the S&P 500, we have broken out of this clear trend line, right? But at the same time, there's a nearby area of resistance. So if we could see price once again do a pullback into some support from that, continuing higher to retest this area of resistance, and then hopefully coming up higher into some of these areas of resistance on the left at just 0.21 to 22k. Right, but overall still bullish on indices. We have come and respected some of the clear supports to the left on the NASDAQ as well as the Dow Jones. So there shouldn't be any concern as of now to be bearish on equities, right? Especially after strong earnings and everything's looking good in the economy, people should be in a risk-on environment. All right. Once we see a shift lower, then we'll try to find out why it's slightly shifting lower. Okay, but I also forgot to cover news, but keep in mind that next week we do have a few news releases. Monday is a bank holiday for the US dollar, for the Martin Luther King Day, and just overall a week filled with high impact news releases, right? There's none on Wednesday, but on Thursday and Friday we do have a ton of Euro, GBP, and USD related high impact news. Okay, PMI, which is the Purchasing Managers Index, quite an important news release into insights on how the economy is doing. So definitely keep that in mind when you're trading, especially on an intraday basis. So we've covered indices. Let's look at gold right here. Gold is actually, it's not really looking too clean, right? Like last week I did say that we could expect this move higher, retesting this high right here at 2718. And then now we've formed something of a triple top, although we haven't really formed a strong bearish closure. Once again, I don't trade these double tops, triple top patterns, but this is clearly an area that's been respected multiple times in the past. And the reason I say I'm not keen on longing gold right now is that because we see such strong data from the US, and the rising rates actually make it a lot less appealing, despite, of course, its lingering geopolitical risk on a global scale. But just looking, it's not exactly clean in the sense that rising rates make people more interested in, like cash, fixed deposits, government backed bonds. It's not really a good indication for gold to keep going higher. So if you're trading off technicals, that's fine, but based on just the fundamentals in itself, gold shouldn't be that bullish right now. I think this run in itself is pretty corrective, right? We see higher highs, higher lows, which is not exactly something you will want to see from gold in a sense. Or you want to see strong momentum, just consecutively up close candles if you are truly bullish on gold. But with that in mind, if we can get this strong body break above and we're holding above 2718, I do think we could see price continuing higher to 2787, but I don't think as of now we have enough of a momentum to breach this to make all-time highs. Of course, I could be wrong. The long-term target for this year is still 3000, right? Somewhere up here, 3000 mark, right? But as of now, I just don't see any strong supporting factors in terms of sentiment analysis and fundamentals to breach that level and make new all-time highs. Of course, I could be wrong. Gold's always been a bit random, but a break above 2718 and holding above 2718 would be nice, right? I also want a breach of 2743. It's not exactly a big range. Let me see how big it is. Yeah, it's like 300 points, not that big, which is funny. 300 points now, it's not that big, but back then it was pretty big. But I want a breach of that. And if we do respect this level, and then we turn strong bearish right here, let me just clean up everything. My drawings kind of suck. Anyway, but if we do close strong bearish, once again, we could see this pullback down into this area of accumulation of around 2658 to 2633, which is quite frankly around almost 500 points, right, where we currently are. We could see that move lower to correct price, and we might just see a rangy market from there. Okay, but just for now, gold is pretty much stuck in this big range. It's been stuck in for a long time, right? If we take the external, it's pretty much this big range. So yeah, just waiting to see what happens. Not much as of now. Now looking back to our last pair, Bitcoin. Bitcoin came off of this strong area right here. It's making headlines once again, reaching all the way up to 104. Right, last week it broke 103, and I think this bullish push higher is due to kind of like just speculation that Trump will prioritize crypto as part of his policy agendas. This has actually caused a strong rally, but as of now we've reached all-time highs. This resistance, anything could happen. I wanted a break of this trend line with momentum, which we have seen. So I'll remove this trend line. It doesn't really serve any purpose anymore. But if you were to continue to break this high right here, this all-time high at around 108, I want to see price respect this level, go higher. If not, we could end up seeing price thread lower into this price action, taking out this low, or maybe even taking out this entire zone for lower prices, even though I don't think that's going to happen anytime soon, right? But at least I would like to see a retrace lower to get into this area. I personally have gone into some Bitcoin positions right at this low right here within this price action, so I would like to see either a move lower for me to get more positions in, or for us to break all-time highs and I get more profits on my positions anyway. So let's see what happens. Either way, bullish on crypto. There's nothing for you to say that you're bearish. So looking at just core areas of price action to get into longs at would be a pretty good idea overall. Yep, so that's pretty much it for this week. Keep in mind of the news releases, keep your account safe, and I will see you all in the next one. Peace.